At the moment, there's a great opportunity that's turning up in one of the indices. And I'm going to outline for you what this opportunity is based upon and the outlook for this trade. I'm going to show you what's in favour of the trade and what could invalidate the outlook. I hope you find this useful.
Now, one indices that is of particular interest at the moment is the FTSE 100, also the FTSE 100 futures chart. Now, one of the key issues that's really been weighing on the FTSE 100 over the last 2 or 3 years has been the fact that the UK withdrew membership from the European Union and was still to arrange its future trading relationship with the EU. Europe is the largest trading partner with the UK, so it's very important for the UK's economy that a stable relationship was drawn up between itself and the EU for an ongoing relationship. Many investors had been keeping back investments into the pound due to the reasons that the uncertainty over Brexit meant that investors were obviously nervous about their investment. Now, the UK has finally agreed its future trading relationship with the EU. A deal has been struck, and it's a deal that is broadly favourable for the UK and the EU. So as a result, the UK can carry on, in one sense, business as usual, despite some changes that will inevitably come. However, the big picture is that the trading relationship remains in place. As a consequence, investors can now invest back into the UK with confidence. So one particular index that's worth looking at is the FTSE 100. Now, you can see with the COVID-19 induced falls and the recovery in the FTSE 100 has been a little bit slower than some of the other indices. If you look at US markets, you look at the DAX, you look at some of the other major indices, they've recovered much more quickly. And of course, that was in part due to Brexit uncertainty. Now, the relationship has been arranged between the UK and the EU. So this very simple trend line break provides a potential opportunity to go long in the FTSE 100. This trend line can offer an excellent line in the sand. Stay above, bulls are in control. Get below, the bears are back in control. It's a very simple trend line, but yet a break of these trend lines can often be powerful messages. Now, this is obviously a weekly chart, so this is a more medium-term outlook, and the obvious target would be back up to the 7,500, 7,600 levels. That would be the obvious target for any buyers. Typically on these trend line breaks, you'd expect either a retest of this trend line and potentially a move higher. And if price were to close back below that trend line, that would invalidate this outlook. Now, we've also seen a democratic blue sweep from the US. Now, that democratic blue sweep has meant that there's likely to be very large stimulus coming into the US stock markets. And as a result, we've seen upside in the NASDAQ, the Dow Jones, and we've seen upside in the S&P 500 on anticipation of this large stimulus package. That also lifts global stocks. So as a consequence, that is another factor underpinning this potential upside move in the FTSE 100. Now, what would invalidate this outlook? Well, one concern is the strong COVID-19 variant that's being experienced in the UK. The UK is currently in a lockdown, and this new lockdown and tier 5 strata of the UK alerts level to COVID-19 means that the NHS, the National Health Service here in the UK, is in danger of being overwhelmed. So one risk to this outlook is if the recent COVID-19 cases becomes too strong and becomes a strong drag on the UK economy. However, should that be the case, you'd also expect to see a new range of fiscal stimulus packages coming out of the UK, so that should be supportive potentially for stock markets as well in the UK. So that's a really interesting opportunity, that simple trend line break, opening up a potential move back up to that 7,500, 7,600 region. That would be a decent target for buyers, with a near-term target at that 7,100 level, which is near-term support and resistance given this strong 7,000, 7,100 band of previous support we have here that was broken in March of this year. So that would be the first target, and the ultimate target up there, 7,600. Stops could be run below 6,200, but of course once price breaks down through that trend line, you would expect to remove the position, as the break of that trend line to the downside would invalidate the outlook. A break and close above this region on the weekly chart would indicate potentially higher prices in the coming weeks ahead. I hope you've enjoyed this video. Don't forget to check out my blog at blog.hycmlab.com, my LinkedIn profile, and also my Twitter handle. And please do feel free to contact me directly at giles.coughlin@hycm.com. I put together a range of different packages for traders, and it would be great to hear from you and assist you in your trading. Thanks now, everyone, and have a good day. Goodbye.